Hello, everybody. Happy Monday. Are you ready for your weekly market update for Phoenix? I hope so. I have a few updates for you this week. I hope everyone's enjoying the cold weather. It's been really freaking chilly in my opinion. That's why I'm sitting here right now. I attempted to go outside to record this video and I was like, no, I'm too chilly. So I'm being a typical Arizonan and I am sitting inside. But anyway, so for our update this week, a shocking thing has happened. Just kidding, that's sarcasm. Our market index is at 392, so it went up from last week again. Same story there, but there is a difference this week. We are definitely seeing some weakening in demand, but don't get too excited. It's probably because of the holidays. So the push towards this index of 400, which is where we're heading right now, is not because of demand at the moment. It's because of decreasing supply. And lately, as I've said, like since May, the reason this index has continued to grow is because we've had such a huge spike in demand and our supplies kind of stayed stable. Now we're seeing the opposite. We're seeing the supply go down and our demand kind of going down as well. So what this means though, is, we're still on that same trajectory of a very, very strong seller's market and prices are continuing to increase. However, if you are a buyer and you're looking to buy a house right now, it is a good time in the next 2.5 weeks before this year is over. It's a good little window of time where everyone is distracted. You're going to have less competition among buyers. Granted, our supply has gone down, but everything's just moving a little bit slower. Our median days on market is 12 right now, which has gone up over the last month and a half or so. Because of the holidays. So everything's just moving a little bit slower. So if you are looking to get into a home, now might be the right time to jump in and capture that because you'll have less competition and things are staying on the market just a little bit longer. Some other updates. We've seen some change in the lending requirements. So they've loosened lending a little bit. FHFA announced a new baseline conforming loan limit to 548,250. This is a 7.5% increase from 2020's limit of 510,400. So what that means is that loan limit has increased. If you're buying a property with financing, you can get financing if you're qualified up to that number now without going into the jumbo category. So it used to be 510, now it's at 548. So what happens when we loosen lending slightly is it boosts demand. So I would expect that starting in January, we will see that demand tick back up right away because first of all, we're out of the holidays, and second, this lending change might inspire some of that. Additionally, there's been talk of a first-time home buyer credit by the new administration. And if they do decide to do that, that will also boost our demand. Problem with all of this is none of it boosts our supply, which is the issue. So we will go back into the same situation of many people that want to buy homes and not enough homes available to buy. And then our prices continue to go up. So we'll see how that plays out. But that's kind of what we're expecting for January. In terms of sales volume lately, we've seen the biggest increase year over year in our sales in the price range of 600 to 800,000. So that's been a high performing price range, and 1 million to 2 million. So these are changes. We haven't had this many high sales or this many prices at that level, this volume of prices at that level in the past. It's Monday, I guess I can't talk. So that's definitely something new that we've noticed from throughout this year. Also wanted to say that there are a few different employment corridors coming to town. So as we talk about how the housing market changes, it is affected largely by migration and then also employment. So there is a new employment corridor around the I-17 and the 101. I think it's on the east side, kind of by the Deer Valley Airport there. There's also going to be a new area of employment around the stadium, a lot around the new 202 loop, and I believe another one closer to South Phoenix. So a lot of new companies that are starting up there are moving their offices there and creating employment opportunity, which then, we get a lot of demand for homes in that area. So as a seller, if you're thinking of selling your home and you're in any of those areas, there's likely going to be a lot more demand for your home in that area. And, of course, if you're a buyer, if you want to buy in any of those areas, it's a good idea because those homes will certainly appreciate as more demand for them comes into the market, over the next year or so as we build those employment centers. So that's my update for this week. I hope it's helpful. Reach out if you have questions, and I'll be back next week with any new changes that we have. Have a good week.